Q4 and FY26 earnings conference call of Shaily Engineering Plastics Limited. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal a conference specialist by pressing star then 0 on your touchtone phone. Before we begin, a brief disclaimer. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company has on date of this call. These statements are not the guarantees of future performance, and it may involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Amit Sanghvi, Managing Director of Shaily Engineering Plastics Limited. Thank you, and over to you, sir.
Thank you very much. Good afternoon and a very warm welcome to all the participants. I would like to thank you for joining us today for Shaily Engineering Plastics Q4 and FY26 earnings conference call. I have with me Mr. Sanjay Shah, our Chief Strategy Officer, and SGA, our Investor Relations Advisors. I hope everyone has had the opportunity to review our financial results and investor presentations, which have been uploaded on the stock exchange as well as company's website. Before discussing business performance, I would like to briefly comment on a broader operating environment. The quarter has witnessed heightened geopolitical uncertainty, particularly due to ongoing tensions across global trade corridors, which impacted freight movement, supply chain, and input cost dynamics. For the plastics and polymer industry, this translated into raw material price inflation and selective logistical disruptions across certain export routes. Despite this environment, we were able to navigate the quarter in a stable manner, supported by our diversified customer base, long-standing customer relationships, disciplined execution, and very strong operational planning. Coming to key business developments. During the quarter, Shaily achieved a landmark milestone with the successful commercial launch of our Shaily Harmony and Shaily Neo pen injectors with multiple customers for semaglutide in India as well as other global markets. We have also today made a press release announcing the significant milestone, which can be found on our website. This is a significant achievement for us. It represents years of development, qualification, and regulatory work coming to fruition at commercial scale. The semaglutide market is one of the fastest growing drug segments globally, and our positioning as a supply partner in this space is a strong strategic asset. Pen injectors manufactured by Shaily for semaglutide have been successfully launched by our customers in the Canadian market. This marks our entry into one of the most regulated and quality demanding pharmaceutical markets in the world, and is a strong validation of our manufacturing standards, regulatory compliance, and the trust our customers place in us as a supply partner for critical drug delivery devices. In addition to the launch in Canada, Shaily's pen and its customer are the first to receive tentative approval in the US market for semaglutide as well. Also, one of our customers received European market authorization for teriparatide. These approvals are important validation milestones. They affirm the quality and the regulatory compliance of our manufacturing platforms across multiple geographies and therapeutic areas. I'm pleased to share that we successfully commenced commercial supplies to our consumer electronics customer during Q4 FY26. This is a business we've been preparing and qualifying for over the past several quarters, and the commencement of commercial deliveries marks an important new growth vector for Shaily. We are now an active participant in the consumer electronics precision component ecosystem, a space characterized by high complexity, tight tolerances, and less than a handful of players. We have signed a supply agreement with the Korean company for the manufacture and supply of semiconductor trays. This marks Shaily's entry into the semiconductor supply chain, a strategically significant development at a time when India is actively being positioned as an alternative manufacturing destination under the China Plus One policy framework. Semiconductor trays are precision-critical components, and our ability to win this business reflects our manufacturing depth and the trust global companies are beginning to place in Shaily. In the industrial vertical, we received new business confirmation from customers for power tool and LED light components. These additions diverse industries and expand the range of precision engineering applications that Shaily offers, from automotive components to power tools and lighting infrastructure. Reflecting the confidence in Shaily's next phase of growth and the multiple new opportunities ahead of us, the Board of Directors have approved an enabling resolution to raise up to 500 crores. I would like to clarify that this is intended to be an annual affair. The company will seek a fresh enabling resolution each year to maintain financial flexibility and ensure that capital is always available to seize high quality, high growth opportunities without delay. This is not a signal of any specific fundraise plan, but rather a disciplined approach to being prepared with capital. As Shaily continues to evolve into a diversified, IP-led global manufacturing platform, serving healthcare, consumer electronics, semiconductor, trays, industrial, and other consumer segments, the pace and scale of opportunity demands that we remain agile. Having this resolution in place ensures that if and when a compelling, large, time-sensitive opportunity presents itself, the company remains ready for it. We've also taken some significant steps organizationally to strengthen our operations to deliver the scale-up we have planned by onboarding Mr. Joe Kam. An announcement was made earlier in February regarding Shaily hiring its Chief Operating Officer for Healthcare. I'm very happy to announce that Joe has hit the ground running and is taking real ownership and showcasing great leadership, taking Shaily's operation strengths further. He has a very disciplined approach and is a stickler for quality, something that we hold very close to our hearts at Shaily. Coming to segment-wise performance, the healthcare segment was the standout performer in Q4 FY26, with revenue doubling in Q4 FY26. For the full year, healthcare revenue surged 139% to 393 crores, contributing 40% of our consolidated revenue, up from 21% in FY25. This shift in revenue mix is the central storyline of FY26 and reflects the compounding benefits of our multi-year investments in R&D, in pen injector platforms, and drug delivery capabilities. The consumer segment unfortunately degrew in Q4 26, primarily reflecting weaker market demand for home furnishings across Europe and the US, our two largest export markets for this vertical. For the full year, consumer revenues were at 512 crores, down 9%. While the near-term environment has been softer, I want to emphasize that the consumer business continues to add new customer programs, and we remain focused on building sustainable revenue streams in this segment, particularly through consumer electronics and semiconductor trays. The industrial segment continues to grow, with Q4 FY26 growing at 60% year-on-year. For the full year, industrial revenues grew 41% to 87 crores, reflecting new customer additions and expanded engineering applications. We secured new business from customers in power tools and LED lighting, both of which speak of the increasing precision and complexity of application that Shaily is now being entrusted with. As we look ahead to FY27, our priorities are clear. Continue scaling the healthcare vertical, build and scale the Abu Dhabi facility on plan, deepen our consumer electronics and semiconductor programs, and restore growth momentum in the consumer home furnishing segment. The building blocks are firmly in place, and the team has demonstrated consistently that we have the capability to execute. As we have consistently maintained, we expect the company to deliver. I apologize. Sorry. I now hand over the call to Sanjay to walk you through the operating and financial highlights in more detail. Thank you very much.
Thank you, Amit. Good afternoon to everyone on the call. I will start with the operating metrics for the quarter and full year ended 31st March 26, and then move on to the financial performance. Operationally, we continue to improve efficiencies across our manufacturing network. Machine utilization improved to 47.6% in FY26 compared to 42.2%. last year. Exports continue to remain strong and contributed around 68% of our revenue in FY22. Let me now summarize the consolidated financial highlights for Q4 FY26. Revenue stood at 237 crores as compared to 218 crores during Q4 FY25, a growth of 9% year-on-year. EBITDA stood at 69 crores as compared to 55 crores in Q4 FY25, a growth of 27% year-on-year. EBITDA margins stood at 29.3%, an increase of 420 bps over Q4 FY25. PAT stood at rupees 40 crores as compared to rupees 29 crores during Q4 FY25, a growth of 40% year-on-year. PAT margins stood at 17%, an increase of 390 bps over Q4 FY25. Coming to segmental revenue breakup for Q4 FY26, in the consumer segment, revenue stood at 102 crores as compared to 148 crores during Q4 FY25, a degrowth of 31%. Amit, in his opening remarks, basically explained the reasons why this degrowth happened. In the healthcare segment, revenue stood at 113 crores as compared to 56 crores during Q4 FY25, a growth of 110%. In the industrial segment, revenue stood at 22 crores as compared to 14 crores during Q4 FY25, the growth of 60%. Now coming to FY26 consolidated highlights. Revenue stood at 991 crores as compared to 787 crores during FY25, a growth of 26% year-on-year. EBITDA stood at 288 crores as compared to 178 crores during FY25, reflecting a growth of 61% on a YOY basis. EBITDA margins stood at 29%, an increase of 630 bps over FY25. PAT stood at 170 crores as compared to 93 crores during FY25, a growth of 83% year-on-year. PAT margins stood at 17.2%, an increase of 540 bps over FY25. Cash PAT for FY26 was reported at 219 crores as compared to rupees 135 crores during FY25, a growth of 62% year-on-year. Our ROC and ROE stood at 35.8% and 26.9% respectively as on 31st March 2026. Our debt to equity stood at 0.3x and our fixed asset turnover ratio stood at 1.7x as on 31st March 2026. Now coming to segmental revenue breakup for FY26. Consumer segment revenue stood at 511 crores as compared to 561 crores during FY25, a growth of 9%. In the healthcare segment, revenue stood at 393 crores as compared to 161 crores during FY25, a growth of 139%. In the industrial segment, revenue stood at 87 crores as compared to 61 crores during FY25, a growth of 41%. That concludes the update from my side. We will now open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Shaily Kumar from UBS India. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir.
Yes.
Yeah, hi. Congratulations, Amit. Congratulations, Sanjay bhai. Great set of numbers and certain milestones in this quarter. So to begin with, let's talk about the healthcare. So Amit, my question is would like to take, what are your customers talking about? So are you seeing, basically what I'm trying to understand, are your customers are coming back and, asking more from you given, there's a good reception of, semaglutide in India and other markets have opened up? Are there instances of like that to begin with?
Yes. Given only two launches in Canada, we are asked for more product. And, we're doing what we can to install more capacity as fast as we can to supply that product. So there are instances being asked for more, certainly.
Okay, that's basically a great indicator. Now, since you touched upon the capacity, so we have 25 million capacity came up in March, and then we had 30 million, right, earlier. So are you using part of that 30 million also to supply semaglutide?
No, semaglutide is only from. So we had the 25 million capacity that we installed in March is currently running at roughly 45% utilization level, as in not utilization, at operational efficiency. So the speed is, it's a process to getting to that final optimal speed. We're going through that process of scale up. We have consistently been producing at these levels for the last 45 days, which means that we will now be enhancing it in coming months. From the 30 million of original capacity, that is a mixed capacity between several product lines, including insulin, including teriparatide, including several of our other, including the auto injectors, etc. So there's only a small portion of that capacity which is being used for semaglutide. The additional 25 million that will come in by July, August is purely for semaglutide, which will be again used for the global markets where the product is launched.
So what kind of optimal capacity we can achieve in these lines, both the lines?
See, what our target is that, by the end of the year, both lines should be able to produce at 65 to 67 parts per minute effect, which gives us a combined capacity of both these two new lines of around 40 to 42 million pens combined.
So that's where, so basically 42 million is something which is the optimal 40 to 42 million pen. Is the, say, peak utilization or the optimal utilization?
For this year. Yeah. And then once as you learn more about the lines and you figure out what upgrades are needed to take it further.
Got it. No,
I'm sorry to interrupt, Mr. Shaily. I would request you to please come back in the queue for further questions. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. Thank you. The next question comes from the line of Harsh Shah with JM Financial. Please go ahead.
Hi team. Thanks for the opportunity. Firstly, congratulations on the new customer win in semiconductor and consumer electronics. So 2 questions from my side. Firstly, on the semiconductor client with which you have kind of signed an agreement, right? How should one think about in terms of the supplies will be made to a fab player or an OSAT player? And is the understanding correct that these supplies would be happening in India?
So Harsh, it is basically going to go to the OSAT players currently. Eventually, when fab gets set up in India, it will also go to the fab player. Yes, supplies will currently be made in India, but there could be a possibility where we could look at exports also to this company.
And
we will basically be looking at supplies in India.
And when should one expect the supplies to start from?
Q4 of the current financial year.
Got it. Okay. Secondly, on the consumer electronics segment, right? So you have mentioned that there's been the commercial supplies have already begun. Is this a case similar to semiconductor vertical wherein the supplies would be happening in India, or is there a possibility that we could even export to, say, a country like China or somewhere else? And also related to this, how large is this opportunity for this specific client, if you could give some color on it?
The supplies will happen both in India as well as it will be exported. In terms of an opportunity, I think, Harsh, last time on the call, Amit had mentioned that over a period of 5 years, this opportunity could be fairly large. And he had mentioned the numbers also at that point of time.
Got it. Just last, if I can squeeze in, this question is to Amit sir. If you have to kind of give a roadmap, say 5 years from now, which vertical are you most excited about, say, in terms of the potential or the scale? Or rather, let me put it this way: if you have to rate in terms of, say, the absolute size that Shaily as a company can achieve, say, in all the newer verticals as well as your existing verticals, how would you rate them, say, between healthcare, consumer electronics, semiconductor?
I would say first it's a tough question because nobody knows what happens 5 years out. But I would say healthcare and consumer electronics represent the two largest opportunities. Which scales faster is a very difficult question. And as you can imagine, the consumer electronic market is significantly larger than the pen market. But there are a very limited number of players in the pen market. So, we, as being one of the few players present in that market, have a very significant opportunity to scale up. Those two, I would put either number 1 and 2, or both of them would be number 1. Semiconductor would be the second largest scale-up opportunity we see, and then the industrial and consumer. Industrial and consumer would more or less be together. Consumer is going through a bit of a rough time right now, but it will bounce back. We've gone through these cycles in the past. This is not the first of its kind, so it will bounce back at some point.
Got it. Perfect. That was helpful. I'll get back in the queue. Thank you.
Thanks.
Thank you. The next question comes from the line of Akhil Parekh with 361 Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on the solid execution. My first question is on the pen side, healthcare side. Will you be able to quantify the volumes which we would have done approximately for FY26? Because if I recollect well, we were guiding for around 26 million of volumes for full year. If we were able to achieve that number, that's my first question.
Yeah. So, Akhil, is it?
Yeah.
Akhil, I don't have the exact number, but I remember the last time I saw them, they're in the range of 23.3 or 23.5 million devices. Now, I don't know the exact tally off the top right now, but they're a little lower than what we had said, and primarily because our capacities, are not able to produce what we had projected.
Sure. This is helpful. And second, on the capacity ramp up, right? The new additions what we've been doing. I believe that we'll be adding total 15 by July, August, as you indicated, of which 25 is already added. Is it fair? Total capacity of 15 million should get completed by end of FY28?
By FY28, I think what we're targeting is 40 million, 35 to 40 million pens from that capacity should more or less be, in supply by end of FY28. FY28 is March 27, right? March 28. Yeah.
Yeah.
Thank you.
Mm-hmm.
The next question comes from the line of Bhavin Rupani with Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So first question is related to consumer electronics. So just wanted to understand how should one look at margin profile, ROC, and incremental capex, which you might need for this category?
It's a difficult question, and the reason is that all numbers first are not bad, they're quite good, but they only happen when you have scale. Okay? So if you look at Shaily's history, even consumer, when we didn't have scale in home furnishings business, our EBITDA margins were single digit, profit margins were maybe very low single digit. Right. So consumer electronics is going to go through a cycle. Maybe the ramp up will be a lot faster, but it will go through a cycle where until you have a certain amount of scale, you will not be able to see great margins. And the reason is very simple, because it's a technically challenging manufacturing environment. Your overheads are going to remain high even when you have less revenue. So, a certain scale is necessary. Maybe that scale is $20 million, $15 million, or somewhere around there before you actually start seeing good margins come in.
Any indicative range, sir, should be near about consumer wear margins?
Initially, we would not be able to give individual margins.
Very different. Yeah.
It's a B2B business, and I think you'll understand the reasons for that.
Right. And any incremental capex that we need for this business?
So we have said that we would need to set up a plan down south. We are evaluating, but our estimate is we will need an initial capex of somewhere around 100 crores when we set up the plan.
All right. Second question is related to, sir, eye applicators. So we have recently commissioned machines for eye applicators. Just trying to understand at what stage we are right now and when should we expect incremental revenues flowing in from this category. And also if you can throw some light on what could be the market opportunity over here.
Yeah, we've done for a single customer at the moment. Market already exists for that customer. We won't be able to give you name, but the market already exists, and it's a substitute product for one that they are importing. Again, it's meant for regulated markets, and we have factored the commercialization of the eye applicator in the current financial year.
Thank you. The next question comes from the line of Dhruv Sitlani with Everflow Partners. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Yeah. Congratulations on the good set of numbers, sir. So my first question to you is, what are the entry barriers for someone looking to enter this space? And how long is the process for a partner to change or add an additional supplier to their drug filing made with regulators in, let's say, Canada and Brazil?
Okay, we'll talk about Canada. If Canada, you want to add another device to your filing, you have to run the full program, the full development program. It's time consuming. I would say nothing less than 24 to 6 months. And one really needs to look at costs and risks. So cost is not going to be less than what you've spent on the first program. And then the risk of potential, failure to get approval. But it's not impossible, certainly. So I hope that answers the question.
What would be the approximate cost?
Look, I think on average, generic companies are spending 150 crores, I think, on a program. So I'd say probably 70-80% of that you'd need to spend to add another device.
Okay, sir. That is helpful. My second question is, of the filings made in various geographies, especially Canada and Brazil, what % of the filings have been made with Shaily's device?
I've stated this in the past. I think if I look at all the top, the first 6 filers in Canada, 70% is ours, I believe. 70% is ours. In Brazil, it's a little bit more difficult because in Brazil, it's a lot of partnership filings, not direct from our customers. So, and we are not privy to all the partners in Brazil. But I think I'm confident we will be in the first wave of Brazil approvals.
Okay, sir. Thank you. That is all from my side.
The 2 customers who have got approval, 2 pharma companies who got approval in Canada, both are with Shaily.
Okay, sir.
Thank you. The next question comes from the line of Dwanil Desai with Turtle Capital. Please go ahead.
Hi, good afternoon, everyone, and congratulations for a very strong performance. So my first question is, you mentioned that this year we ended the year with 23.5 million kind of pens, and I think we were thinking about around 36 million next year, 36, 37 million, and maybe 50 million, closer to 50 million the year after that. Now that the Canada approval is in place for the two large players, but Brazil is still nowhere in sight, and India is picking up. So given all this, do we still hold on to this number?
I mean, look, for the current fiscal year that we're in, obviously our order book is frozen. So it's now about how quickly our capacities come up and, how effectively they're able to produce. These are very, very complicated lines. So it doesn't have a whole lot to do with our skill set to produce. It has more to do with how quickly can the lines be running at the speed they're specified. So I think for the current year, I'm fairly confident we should be on track. But of course, a big unknown at the moment is the line that comes in August, which is not installed yet. So I think we'll be able to give you a better perspective on this probably towards our earnings call in September, October.
Yeah, the Q2.
Okay.
The Q2 one.
Okay. So a follow-up on that, sir. So our supply to both the players in Canada, would have started and will ramp up. So unless if there is any bottlenecks on the production side, will that supply suffer? How should we look at that part?
Bottlenecks on the?
So you're saying that we are ramping up the production, right? That are still in the early phases of production ramp up. So if that doesn't go as per plan, is there any risk to the supply to any of these customers?
Well, yeah. If we can't supply enough, then there is a risk, right? Yeah.
Okay. So second question is, we are working with the innovators, on the new project. So if you can give any update on that, and the CapEx we are going, and that's one of the roadmap for the current year. With the current geopolitical thing, any kind of thinking on that project or any thoughts on that? So these two questions.
On the geopolitics, we don't see it as it being a long-term impact. If anything, it's a very, very short-term impact. Again, it's not really impacting our project timelines. We have factored in adequate additional time for bringing up the facility in Abu Dhabi, and we're probably eating into some of that buffer at the moment. Beyond that, it's a great region. You've got significant amount of benefits on certainly on operational costs, ease of supply chain, availability of really, really international talent. As you can imagine, it'd be very difficult for us to, while we have done a good job, it's difficult for us to attract very good talent in a city like Baroda. So,
sure.
Abu Dhabi becomes overall a much friendlier place to scale this business. And, if we were looking at healthcare has been growing at almost 100% every year. If we want to continue that momentum, we need the right people. And increasingly, what we pay for expat talent in India is much, much more than what we would in a country like Abu Dhabi.
Got it. And sir, on innovator part?
Yeah, these conversations are advancing well. That's all I can say. Until we have some breakthrough, I won't be able to divulge any further information.
Okay, got it, sir. Thank you. That's it from my side.
Thank you.
Thank you. The next question comes from the line of Bhavika with Niveshaay. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Just want clarity on the previous commentary you did on the capacity utilization. As you said that the capacity which is live in March, we are doing 45% of our operation, like efficiently utilized the facilities currently. So by the end of FY28, when we expect, like along with the 25 million capacity which is going to come in July, and so I just want for a number for the FY27 and 28, that what optimum utilization we can expect from the total capacity which we'll have by the end of FY27 and 28.
I think the first, I've answered.
You partially answered that question also.
I've answered these questions partially, but I'll just go through it again. Look, our projections are 36 million pens this year, roughly 50 next year. So, when you look at all the smaller capacities we have, for example, on Tristan, on Toby, those products aren't in supply, right? So when they get approval and they get into supply, those capacities will be utilized. So on semaglutide, we have, let's say, for example, a total of 50. By the end of the year, we'll have about 50 million capacity. So we intend to fully, or as fully as possible, utilize that over the next 2 years. And then we'll have capacity on insulin, which we also intend to utilize at least up to a 60-70% level. So that's roughly, as capacity stands today. So you can look at it as a range of, somewhere between 40 to 60 million kind of pen by, at the end of 24, 30 months from now.
Got it. And the second question I have on the margin side, like we did a quite good margin in this year. So do we expect this to sustain over time with the semiconductor segment coming in and along with the Dubai capacity? Abu Dhabi capacity, sorry.
Short answer, yes.
Okay. And it will be like sorry. Yeah.
Just keep in mind that we don't look at Shaily from a quarter-on-quarter perspective. Otherwise, the margins are sustainable.
Sustainable, like at 28% and more.
Bhavika, I think what we've been saying is if you look at more on a year-on-year basis, margins will be sustainable and we see margins improving.
Okay. Got it.
We would not want to get into numbers.
Yeah. Thank you for answering.
Thank you. The next question comes from the line of Aman with Astute Investment Management. Please go ahead.
Good evening, team. Just two questions, Amit. First, since our product was launched, I think, last week in Canada by both our customers, what has been the initial feedback from the customers, as well as can you also talk about the feedback from India launch, both 2-3 devices which we have launched in India? Any complaints and all those things we have received?
Yeah, I think we two complaints. One was a user error. It wasn't related to the device. And one was related to the device. We had an issue on one of our printing. We print numbers. So there was a small issue. But in terms of performance, there have been no complaints. There is a particular Reddit forum that I tend to read from time to time, which, has kind of different user experiences in India, at least on taking different generic semaglutides. So happy to say at least that, people seem to have trust in the Dr. Reddy's product, which is also, I believe, marketed by Torrent.
Sure. That is helpful. Second question is, our Canada launch has happened, but in your rough estimate, when do you expect the other three big geographies, say Brazil, Turkey, Mexico, to happen? Even rough estimate is okay for us.
Brazil, we're expecting soon, very soon. I don't know if soon means end of this month, end of next month, but somewhere Brazil should come in.
Okay. And any update on, say, Turkey and Mexico? These are also big geographies.
I think they will only happen after Brazil, to be honest. I'm not sure if they're able to come before.
Okay. These are from my side. Thank you.
Mm-hmm.
The next question comes from the line of Ankit Gupta with Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations for a great year. So on our UK subsidiary, for the past 2 quarters, Amit, if you look at it, we have seen like the lowest margins as well as revenues over the past 2 years. And so earlier, when we used to in the calls, we used to tell that we should be able to maintain the growth rate and margins there. So how should we look at the performance of the UK subsidiary with the commercial launch on the SEMA front happening across geographies, and most of the customers would have been already onboarded to the platforms?
We're doing slightly more longer term projects in the UK. So agreements, maybe, engagement with customers that are going into multiple years. Milestone-based revenue. Sometimes you're not able to recognize a certain revenue. But we've significantly scaled the UK ops from a human resource perspective. Again, doing some of these more complex projects. See, we've done all the pens and auto injectors possible. We cannot be only doing pens and auto injectors, right? So there's a next generation of drug delivery devices that we're working on, and those will be in development for a substantial period of time, be 3 years, 4 years, 5 years. Now, we will still maintain margins in the UK, but you will need to look at, we're offering these services, similar services between UK and UAE, right? So our teams in both geographies kind of work in unison. So look at a combined margin for the UK and UAE, if you were, and that will give you a better perspective.
So the margins that we had reported prior to the second half, should that not be considered going forward in our financials, like from FY27 onwards?
I think you should probably look at margins more on a year-on-year basis.
Sure.
Than focus on a quarter-on-quarter basis.
And growth also should bounce back, right?
Yeah.
Okay. And the second question was on the purpose of the fundraise. Of course, you have mentioned everything, but there was an interesting line that you had used that, time-sensitive, capital-intensive, and competitively raise. So if you can elaborate more on this, like what kind of capital intensity will be required here? Is it an urgent project where, you highlighted that, we'll be commencing supplies from Q4. So if you can elaborate more on this.
Comments, I think those were very related. The enabler, the resolution for fundraise is essentially just be clear. We're not in any capital right now. I mentioned that categorically in my speech. But what we are doing more and more now are discussing projects where the scale and volume of the project, CapEx required, are very, very high.
Okay.
But we're looking at setting up capacities for 50 or devices a year. We're not going to be service that from India or from Abu Dhabi. Right? So the CapEx will be a one-off special tech. And this is why the resolution is so that if such an opportunity arises, we're able to quickly act on it.
Sure. Okay. Thank you so much.
Thank you. The next question comes from the line of Raman KV with Sequent Investments. Please go ahead.
Hello, sir. I just have two questions. One is with respect to the semiconductor tray. What will be our total addressable market once we start manufacturing to multiple clients? As of now, we are doing only for one Korean customers. But what do you think is the total addressable market for this product?
So we will be looking at supplying to everybody who's setting up semiconductor manufacturing in India or chip manufacturing in India.
So out of the total, let me just rephrase the question. I just want to understand out of the total value chain of the semiconductor, what percentage of this in terms of value will be this product?
I think this is more of a volume game, where this is a consumable and would be needed by the semiconductor plants on a day-to-day basis.
Okay.
Obviously, the chip value will be much higher. It's going to be packaged, but it's a fairly decent value.
Okay, understood, sir. And sir, my second question is, with respect to the pen injectables, we have an existing capacity of 30 million pens, and we have added 25 million pens in March, and we are planning to add another 25 million by July, August. So what will be the incremental revenue from this newly addition 50 million once it reaches your optimum efficiency of like 60-65% in next 2-3 years?
I think we would, given our total revenue number which is possible from the capacity, we should look at that instead of a incremental number, which will be difficult to talk about it.
So total as in with respect to the total 80 million, right? What is that revenue?
That is based on the investment in fixed assets which we have. You could probably look at a 2 to 2.5 as
okay,
multiple for. So that's the way to look at it.
Understood, sir. Thank you, sir.
Thank you. The next question comes from the line of Aman Tadlani with Solidarity Investment Managers. Please go ahead.
Hello, am I audible?
Yes.
Oh, yes.
Yeah, thanks for the opportunity. And Sanjay bhai, Amit bhai, I have two questions basically. The first was, you alluded last quarter that you were seeing some rejections, as in the machines were rejecting 30%. We just wanted an update on that. But what is the rejection rate right now in healthcare, and any other manufacturing challenges that you could face at scale?
So rejection has come down to 8% on the line, and the speed has also gone up. Now, what happens is increased speed, and we run it for several shifts. We come across a breakdown. So that breakdown needs to be resolved permanently so that it doesn't affect the speed again. So at the moment we are running, at roughly 34 parts per minute on an 80 parts per minute line, which is why I said that, we're running at 45% overall equipment efficiency. But the rejections are down substantially. So, yeah, it's work in progress. Should be, it's not an impossible task. So it's just a matter of time.
And so the learnings from this 25 million capacity that came in selling, when you again come up with a newer capacity of additional 25 million over there, is it fair to assume that the initial rejections will be low given the learning curve we would have had till then?
Yes, it's not going to be zero, but it will be lower for sure. And it's not so much our learning. I think what we need to start doing is, we look at an investment cycle from triggering the investment to it going on stream of about 12 months. I think we need to look at 18 to 24 months now. So we have to initiate the builds sooner. These are very, very complex lines. And as you can imagine, there's also a handful of suppliers globally who make these lines.
Got it. So the second question is that two more big areas that you're looking at now, that is consumer electronics and semiconductors. So just wanted to understand that what sort of maybe hiring or depth in talent you're looking for in these areas, and when will that hiring begin?
For consumer electronics, we're not doing anything in the Middle East. Middle East is purely healthcare. And hiring will begin towards maybe quarter one next FY, and all the way into September, October next year.
Got it. But then would you be looking to have someone like Mr. Joe that you hired for healthcare? So would that be that sort of hiring, or would it be more maybe manufacturing related?
No, Joe's the chief operating officer. I don't need two of them. He's responsible for the India side. He's responsible for any site we put up globally. So the team
for electronics and semiconductors, similar to that level you would be looking for, or that are maybe not that complex, so you may not look for that. That was the question.
I think what we need on the consumer electronics side is a very high degree of technical expertise rather than organizational expertise. We might lean towards someone with much higher technical expertise and maybe less administration or organizational expertise. But again, it's candidate to candidate. We kind of take a call when we evaluate candidates.
Yeah, very good. And so just one last question. The semiconductor order that you got, just maybe can you qualitatively speak about it, that time it took for us to qualify, how many players were Shaily competing against, and what is our edge in this product? That is also my question. Thank you.
Sorry, there's too much echo on your line.
So in the semiconductor order, just can you qualitatively speak about it in terms of the time it took for you to qualify, how many players that Shaily was competing against, and our edge in this product against other players?
Sanjay, you want to take that? I mean, I really don't know how many players competing against, to be honest.
There was just too much of echo, so I couldn't hear Aman properly.
The question is,
could you please use
how many
your handset?
Am I audible now?
Yes.
Much better.
Yeah. Sir, in the semiconductor order, I just wanted to understand qualitatively that the time it took for us to qualify and how many players was Shaily competing against, and our basically edge or USP in this product basis which we got selected for this order. Yeah.
I think the reason we were able to tie up with this customer is basically because of the technical competence which we have. While the product looks very simple, it's extremely complicated, and it's made of conductive plastic, so it's the key technical skills required for molding the product. I don't know how many people were in discussions, but I'm sure they would be in discussions with multiple people. But then we have been, the way we have looked at this, we'll be the sole manufacturing partner in India.
Got it, sir. I'll get back into you. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Hina with DAM Capital. Please go ahead.
Yeah, hi sir. Am I audible?
Yeah, Hina, go ahead.
Yeah. So just continuation to the previous participant's question. Just wanted to understand on these semicon trails, sort of landscape, was this is this largely China replacement sort of opportunity? Because I understand you will be sole suppliers for your client, but how do we look at it from a more 5-year perspective over here? So will we be competing even if it is in India?
So See, if you look at from a global perspective, there are players in Korea, there are players in China, there are players in Philippines who basically manufacture chip trays. Some of them might come and set up shop here. So then you'll be basically competing against them. I don't think on a long-term basis any of the chip manufacturers would look at importing these trays on a day-to-day basis, because this is something which is required by them every day to run their plant.
Okay. So, but, I mean, assuming, these players do come into India and set up shop, going down the line, do you think that will be sort of, pressure on the profitability we will probably enjoy in the first few years?
It's a little too early to talk about it in terms of that question. Again, a lot of it will also depend on the quality, and if you're tied up with them earlier, then you have a much more longer relationship. Then the customer would not be willing to make that change also. So there could be multiple factors to work around that. Okay.
And so roughly, would we know, how cost competitive, say, a Chinese player would be versus us?
Again, it's something which is currently difficult to answer now.
Okay, understood. And so one small question. I think we did speak about, what sort of pen supplies we'll be doing this year. I think initially I heard 40 to 42 million, but then we also mentioned 36 million. So just wanted to understand the right number for FY27 that we would be targeting.
I think Amit mentioned 30 to 36 million, right, Amit?
Yeah, that's correct.
Okay, understood. Okay, thank you. Those are my questions.
Thanks.
Thank you. The next question comes from the line of Lovely with Systematics. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yeah.
So I wanted to know that on the recently announced rupees 423 crores order for pen injector from a large domestic company. Could you clarify whether this order is entirely incremental or it includes extension of any existing business orders? And also, can you share any broad details regarding the customer profile?
We are bound by NDA, so we will not be able to share the name of the customer. Otherwise, we would have put it in the press.
And the other details are already in the release. So it's a supply over 4 years. Pen injectors.
Okay, so it is incremental over the 4 years, right?
It is, the supply is spread over 4 years. I don't understand what you mean by increment.
Okay.
Increment, yeah, exactly. Sorry.
And the second question is that have we signed any agreements or entered into any commercial engagements with the innovative companies in the GLP-1 segment?
No, not yet.
Okay, thank you. That's it from my side.
Thank you. The next question comes from the